Hi everyone, it's Alex here at Semiconductors Capital Research. Welcome to our Tech Select Pro webinar. It's currently Wednesday, the 29th of March, 5 o'clock Eastern for the benefit of the tape. Okay, so today we're going to cover the semiconductor sector. We're going to cover it because more than anything else in tech right now, semis have run up, the stocks have run up really fast, and the fundamentals of most of these companies are not looking so good. And the divergence between fundamentals and technicals, the stock price is pretty marked. So we wanted to have a look at, is this going to continue? And if so, why? So housekeeping will run on our usual open mic basis. So any questions, points, anything at all, just unmute yourself your side and shout. And failing that, you can use the chat box in the webinar platform, or you can post questions in the webinar platform. But audio is great so that everyone else can hear any comments you have. Okay, let's get started. We'll start off with our disclaimer. So, disclaimer, this webinar is intended for US recipients only, and in particular is not directed at nor intended to be relied upon by any UK recipients. Any information or analysis in this webinar is not an offer to sell or the solicitation of an offer to buy any securities. Nothing in this webinar is intended to be investment advice, and nor should it be relied upon to make investment decisions. Semiconductors Capital Research, its employees, agents, or affiliates, including the presenter of this webinar or related persons, may have a position in any stock, securities, or financial instruments referenced in the webinar. Any opinions, analyses, or probabilities expressed in the webinar are those of the presenter as of the webinar's date of transmission and are subject to change without notice. Companies referenced in this webinar or their employees or affiliates may be customers of Semiconductors Capital Research. Semiconductors Capital Research values both its independence and transparency and does not believe this presents a material potential conflict of interest or impacts the content of its research or publications. Okay, so I want to first of all look at the stock performance that we've seen from NVIDIA in particular. So let's take a look at that. So here's NVIDIA. We'll switch to our weekly chart. And just lose this here. There we go. So NVIDIA, as you will know, offered a rocket ship ride from 2019 through to the 2021 peak. It more or less 10x'd in that period. It then put in a big correction down in 22, bottomed out around $100, just above, from a peak of 350 thereabouts, and it's moved up like a scalded cat since then. So right now the stock is only around 23% from its all-time highs, and it's some 2.5x nearly up off of its lows. So this has been a pretty dramatic move up. Now, if you don't follow the fundamentals of NVIDIA, you could be forgiven for thinking that this thing was in great shape. Well, it isn't, I can tell you. So if we were to look at NVIDIA fundamentals, should be on the screen right now, we can see that pretty much every line we look at is not so great. Revenue on a trailing 12-month basis in the January quarter just reported, flat, 0% growth, and the company themselves is guiding to negative 15% trailing 12-month growth next quarter. That's for another quarter's growth of minus 22%. It's minus 21% this quarter. Gross margin has ticked up this quarter, but nonetheless it remains on a trailing 12-month basis in the high 50s rather than the mid to low 60s where it had been for much of the past few years. EBITDA margins also low, 31%, cash flow margins 16%, lowest for many, many, many years. And all in all, not in such great shape. The stock closed at around 270 today. So the market is asking you to pay 25 times revenue, 80 times EBITDA, and 150 times cash flow for this thing, which clearly on a fundamental basis is, let's call it punchy in the extreme. The chart, however, tells us that this can keep going. And I think the reason this can keep going is because the market has quite correctly got excited about AI. And we'll talk a lot about AI in the coming months and years. But in essence, AI is probably genuinely the next big leap forward for tech. It's probably the thing which will drive a refresh in tech capex. It's probably the thing that will drive the generation change that's coming. And so investors know that NVIDIA, along with AMD, is a fundamental component of AI processing, and so the stock is up massively in anticipation of that. If we were to zoom in on the daily and look at how this short-term move is stepping up, then we have a wave 1 up, 2 down into December, 3 up. We're right around a typical wave 3 high right now. So we are at the 1.618 extension of this wave 1 here. Very common wave 3 reversal, so we may see some weakness before we see a further move up. Or wave 3 could continue, but it wouldn't be surprising at all if it reversed at this point. So NVIDIA, we think, can run higher. It can run to the low 300s in the next quarter or two, assuming even a flat market, and that's in spite of those terrible fundamentals. So once the company starts to turn the ship around, which it will, no doubt, we would expect further acceleration in the stock price. So we remain bullish on NVIDIA. If you look at where it sits in the chart, then switching back to that weekly, it's firmly within our markup zone right now. So the opportunity to buy NVIDIA at the lows has passed. We said this loud and clear at the time. And now it's time to hold, I think, while late money comes in and bids the stock up. Safe places to sell. There's a good chance it makes a new high this year, maybe early next year. So nobody can be criticized for taking gains up there, or even frankly now, if you're invested down there, it's perfectly sensible to trim. Big run up, possible corrective wave down coming, perfectly reasonable to trim at that point. Okay, next one. So let's do another basket case, Intel. So Intel, truly awful fundamentals, negative 32% growth this quarter, negative 20% growth on a trailing 12-month basis, gross margin in the low 40s as opposed to 60% where it was a couple of years back. Cash flow margins heavily negative now. They were heavily positive only 2-3 years ago, and the company is now has just under $8 billion of net debt, which was turned around from a net cash position fairly recently. Stock price closed at around 31 today from memory, and so the market's asking you to pay 2 times sales thereabouts and 7.5 times EBITDA thereabouts. So at least the multiples aren't silly with this one. But you can also see that sequentially the company is getting into further and further trouble. Nothing appears to be turning around yet, and so you would expect the stock to be in trouble, right? Well, it isn't. Where this stock is under accumulation. So if we were to zoom out on Intel, look at the monthly, here's what you would see. From the 2009 lows, it puts in a big move up from $12 a share up to about $69 a share, and it sheds pretty much all of that move down into the 2022 lows. It's one of these stocks, there are many that shed down to the 78.6 retrace of this move up. And we said for some time now the stock is under accumulation. So you can see it with this volume spike here at this price range, and somewhere between $24 and $30. It looks to us like the stock is being built up in amongst large account players, no doubt in anticipation of a further move up. So Intel still just about ready to accumulate. For us, it's just slightly outside the accumulation zone, but I mean barely. And we think this one can make a break upwards. It's often forgotten that Intel does have some AI exposure. It doesn't have the marketing associated with AI that NVIDIA does, but it does have plenty of AI exposure. So that's Intel. And then let's do one last one. Let's do AMD. So AMD actually has pretty good fundamentals. So the growth has slowed. So quarterly growth peaked at actually in the 90s in early 2021, but as recently as June 22, we had 70% quarterly growth. We're down to 16 now. Trailing 12-month growth down to 44%, still very strong, of course. Gross margins have held steady. and they're at a sort of local high at the moment at 49% on a trailing 12-month basis. Cash flow margins there and thereabouts, 18%, all-time high was 21, so that's all right. EBITDA margins again, there and thereabouts, all-time high 30%, recurring at 28%. So AMD unusually is in pretty good shape. And if we were to look at the fundamental multiple, 6.5 times revenue, 23 times EBITDA, 36 times cash flow. So that doesn't seem so bad given the growth profile. AMD again has exposure on the AI front. It's probably the number 2 player in parallel processing compared to NVIDIA. And this is how the stock looks. So we'd seen that we'd had a huge move up from the December 2018 lows from 17 to about 164. Again, like NVIDIA, about 10 times. Took a bit longer to get there, but about 10 times return. Sold off again down to the 78.6 retrace at this level, and we were flagging this as an accumulation opportunity down here to match these volumes here. Let's just reset the clock on this volume chart right here. There we go. So all these purchases you see, this is volume by price, are happening after the all-time high. So you can see the build up, the accumulation here. AMD is just about just a little bit above our accumulation zone, so we now hold it, rate it at hold in this market zone, and we do think that this can move up. First of all, sentiment can move it up as AI enthusiasm ramps. You know, if you spend all your day at a screen on Twitter, then you think we're at peak AI. We're not even close to peak AI. So this can ramp it up. Also, the fundamental performance at AMD is looking good, and probably if demand for compute devices picks up, as it may well do if the economy proves to be resilient, then we could see some further move up in AMD on fundamental prices alone. We'll finish by looking at semiconductor sector ETF, that's SMH. And this is a good approximation for the sector and a good way to play the sector without taking individual company risk. So it's looking pretty good. If we to zoom in, we would probably say that's a wave 3 high there. We may get a sort of short-term pullback, but in the larger degree, this is a standard wave pattern we have here from the 2018 lows, 1 up, 2 down into the COVID crisis, 3 up into the 2021 peak. That's 4 down sell-off that peaks above, so troughs above that wave 1 high, and then a move into a wave 5 high. Now, so SMH can probably reach at least 326, and it currently is sat at around 258, 260, so plenty of upside there. And SMH is a really good guide to the whole semiconductor sector. You can also play the levered version, which is SOXL. This is one of those 3 times daily ETFs, so be careful if you use this. Use risk management techniques accordingly, size, patience, hedging with SOSX and so forth. But you can see that SOXL is way down under the lows and has every opportunity to move up if these names continue. So that's semiconductors. We covered NVIDIA, we covered Intel, we covered AMD. Technicals look very strong. Fundamentals for Intel and for NVIDIA pretty dreadful, but good at AMD. But demand for stock in these companies looks pretty good, and we believe the run-up in semiconductors is going to continue for a while yet. Okay, that's all we had time for tonight, folks. So if you have any questions, fire away. If not, then we will see you in Substack chat later on, and look forward to posting our next note. Thanks a lot, and see you soon.